We do that, I'm just checking the market screen very quickly. So there's some recovery. This is what's been happening. When you hit the lower edge of the trading range, buyers emerge, and that's the good news for the Nifty. The ground is not basically caving in. So some recovery from the early opening lows, but Bajaj Finance is still down 5.5%. So just a note over here. Let's move on. More corporate conversations and more earnings. Hexaware is in focus. Now, the stock has been trading slightly lower this morning, reacting to earnings which were below expectations. Revenue growth was a little below the CNBC-TV18 poll, and margins have weakened. There are a couple of one-off expenses as well that impacted margins in the quarter gone by. So let's discuss this and more with R Srikrishna, Chief Executive Officer of Hexaware Technologies. Great to have you with us. Sri, so let's just start right there. The fact that there was a miss in the revenue is one thing, but also the commentary, because I think the wordings that you've used is that there is continued softness in macros. So just elaborate on this, on top line, what are you seeing around? And this whole debate about whether this is just because of tariff uncertainty or whether there is a bigger disruption out there thanks to AI that's playing out.
So there are three questions there I'll address. First is the miss for the quarter itself was marginal. Okay, the softness in macros, I'm just calling what we are seeing, right? While the miss for the quarter was marginal, I think what we've also said is that because of a solid pipeline, deal wins that happened, and more importantly, solid progress in our strategic initiatives, our long-term growth outlook remains very solid. Now, your question on is it macro, is it cyclical, or is it a more structural AI issue? We think it is completely macro and cyclical. The best proof point for it is if you look at our different verticals and the growth rates of the verticals, headline is travel 23%, financial services 16% Y&Y growth. There's one sector that is materially pulling us down. That is manufacturing and consumer, negative 11.5% Y&Y growth. That's all macros. That's all the uncertainty due to tariffs.
Okay, so you're saying it's all macro, but then what does this imply? I mean, Q2, Q3, if not a guidance, but some sense on, whether this year overall you'll be better off than last year. Will it be single-digit growth? Are you looking at double digits? What's happening with client spends, deal wins? What's the pipeline looking like?
Our pipeline is very solid, okay? And not just overall pipeline, but our pipeline on strategic initiatives, which we called out specifically on legacy modernization, pipeline through a PE channel, high-tech, GCCs in India, which we did an acquisition on. All the strategic initiatives, the pipeline growth is even better than overall pipeline. What it means for a growth in the near term, we said, it's going to be our growth expectations now are a little bit lower than what it was a quarter ago. That's the reality we see, right? What it means is we will still grow nicely in Q3. It's not going to be like an outstanding quarter that it often is in Q3 for us, but we will still grow nicely.
All right. Hi, Shri. Good morning. Good to see you, Ben. So quarter 3 growth will be better than quarter 2?
That's what we hope right now, yes.
As of current reckoning, it seems that, right?
Yes.
And your margins, well, it had quite a few one-offs, many actually. On a steady state, what should the margin number look like?
I mean, our reported EBITDA is 17.2% this quarter, which is a 50 bips improvement from the prior quarter. All the one-offs actually had a net negative impact of about 15 bips. So what you should expect to see going forward is that our reported EBITDA improves. As it has been for a number of quarters, it will continue to improve.
So margins will continue to improve from year on. Growth will be relatively better as well, right?
Growth will be a little bit better in Q3, definitely, than Q2. Okay. But we've said that our growth expectation for the full year is somewhat lower now than what it was a quarter ago.
Okay, all right. Just talking about the margin improvement, you have wage hikes that come into effect from July 1st. That's taken into account in this margin improvement that you're talking about.
That is correct.
Got it. All right. Now give us a
What
few
you
more.
did not ask is, will we give a wage increase? And the answer is yes. We will give a wage increase on July 1st, effective July 1st.
All right. You have given a wage increase effective July 1st, and that's already been accounted for in the margin improvement.
We haven't given it yet, but
you will be giving
it. Effective July 1st. That's what we do every single year, and we will continue that this year as well.
Got it. All right. Let's focus on the broader outlook then from here on. You had a goal of around $3 billion by 2029, I think. Does that goal hold out? And also, you made a small acquisition. Gone ahead and acquired SMC Squared. The revenues that it did last year was around $22 million. This year, I think in the first half itself, it's done around $16 million. How do you see this one scaling up from here on? What is the run rate you're looking at, say, in the next few years?
See, the data is this, that last year there were 1,700 GCCs in India. There's expected to be 1,000 new GCCs in the next 4 to 5 years. That's a lot of new GCCs getting set up, and that's a market that we currently do not participate in. SMC specializes in helping customers set up new GCCs. They operate it, they have different models, but the core of the model is to operate it for 3 years after they set up. So we actually expect solid demand and growth from that business.
Okay, but overall, you are a little, well, let's say, I'm not saying less optimistic, but in terms of just growth this year, you're paring down expectations now at the end of Q2 versus where you were at Q1. So let's see. We'll see how the next 2 quarters play out. Thank you very much for that. Good to have you on. And thanks for joining in. So that's a word coming in from Hexaware. Slightly cautious, but also saying that, that the softness that they're seeing, it's entirely